Hey, what's up, stock compounders? Brad here. So, Bill Ackman of Pershing Square was recently interviewed by David Rubenstein from Bloomberg. And, Bill Ackman is one of the guys that Mohnish Pabrai looks to for kind of cloned stock ideas. So, whenever an investor of this caliber, of Bill Ackman's caliber, does an interview, I soak it up. I devour it. And it was a really good interview just a week ago on June 23rd. And I wanted to share some highlights that I picked up from Bill Ackman's interview. So, the first question David Rubenstein asks: the economy seems to be in a deep recession, at least heading towards a deep recession, and yet the market has rebounded. It's back near its highs before this whole thing started. Why is the market so much higher than the economy? Why is the stock market kind of elevated seemingly while the economy is headed for trouble? So Ackman replied, the S&P 500, which is how kind of what he's talking about in terms of the market, is a market cap weighted index, and this crisis is affecting different companies in different ways. The more dominant large cap companies, with stronger balance sheets, stronger market positions, those businesses are actually huge beneficiaries of this crisis. What the market does not reflect are small businesses, right? Private companies, more levered businesses that don't have access to capital. One of the largest, I think the third largest company in the world right now, or at least in the US, is Amazon. And because of that, it makes up a big component of the S&P 500 index. The larger companies are going to move the index much more than the smaller companies in the S&P 500. And it's up 45% since this crisis started. So that does a lot for the averages. The companies like Microsoft, Apple, Amazon, Facebook, Google. The changes in those companies in terms of stock price are really going to move the S&P 500. So that's why the market has kind of rebounded. If you're just looking at kind of the smallest companies, the smallest public companies in the US, if you have an index of just those smaller public companies, you're going to be down 50 to 80% since this crisis started. So, that's what he sees as why the economy seems disconnected from the market. It's because the largest companies in the market are actually benefiting from what's happening. And he mentions also the value of a business is the present value of the cash it will generate over its lifetime. So even if you have cash flows that are disrupted in the short term, say in the next year or two, if they're greater in the long term, the values are still going to be higher. Valuations for growth companies aren't really affected if you change kind of what's happening in the next year or two. It's the earnings out into the future that really move the needle on the valuation of these businesses. So really the stock market is just a snapshot of a portion of the economy, okay? It is a snapshot of the biggest companies, especially if you're looking at the S&P 500 index. Question 2, why is the market gyrating more than normal? We've seen swings of 10% in a day, both up and down. And to this, Ackman responds, the market is made up of human beings, and people's estimates of the future has been very volatile with so much uncertainty. So much uncertainty with what's happening with the pandemic. When is it going to be over? When are people going to feel safe to travel, to go to restaurants, to kind of resume life as normal? The market in the short term is very much a sentiment index, or a way for people to express their emotions. And there have been a lot of emotions. I'm sure you've been experiencing a lot of emotions in the last couple of months And that comes through in the stock market volatility. He also says, I don't think the market is dramatically wrong when I look at the market on a company by company basis. Okay. So that's kind of interesting. Question 3. So he was asked about his recent bet back in March, where he bet he put up $27 million betting that the credit spreads were going to widen, okay, for the bond market. So he put down 27 million, ended up making 2.6 billion. So it's almost 100 times return, which is amazing. But it's a little bit more complicated than that. He saw that the credit spreads were at all-time lows going into what he thought would be a serious crisis. So he saw an asymmetric upside to downside opportunity. Now, it's not just that he put 27 million down to make 2.6 billion. The way you have to enter a bet like this, the way that Ackman entered this bet, is that you have to commit to pay $500 million a year in premiums for 5 years. Okay? So he had to have access to that capital in order to make this bet. Now, he got lucky that the bet paid off. I think it was like within 2 weeks of entering into this bet. So he only had to put up 27 million in order to get this huge payoff. But, he was on the hook for 500 million a year for 5 years if this thing, didn't come to fruition, if the credit spread hadn't widened. And I'm not even sure how much it needed to widen in order for him to get a payoff. That would be an interesting thing to, find out more of the details about, that big win for Ackman and Pershing Square. Question 4. So he was really asked about, Herbalife, Valiant. What led to, those bets that really went south? And, Ackman talks about, there's 8 principles that have driven the investment success, both for him and, for the company he manages. And when he has veered from those investment principles, he's lost money. So, after 2015, 2016, when, the pain happened from losing a lot of money on those bets, he kind of came back to these core principles that kind of formed the foundation of his success in the early years of Pershing Square. And, he mentions some of these principles, really what they're looking for in investment opportunities. Companies that are simple, predictable, free cash flow generating, dominant companies with large barriers to entry that earn high returns on capital, have limited exposure to intrinsic risks that we can't control. Strong balance sheets don't need access to capital to survive, have excellent management and good governance. That's obviously a lot of boxes to check. But, it reminds me of a book that was recommended by Mohnish Pabrai called The Art of Being Unreasonable. As investors, we can be unreasonable. There aren't any called strikes on Wall Street. We can wait for that perfect pitch before we swing at it. So I like that Ackman, has such a high bar for what it takes before he'll enter into an investment opportunity. And these are, obviously some great kind of perennial principles to live by as a value investor. Question number 5, are you worried about the printing of money to keep the economy afloat? Multiple trillions of dollars going into, helping people pay for rent and food that have lost their jobs, the stimulus, the bailouts, the kind of helping keep businesses afloat. The Fed is printing a lot of money. Is Ackman worried about that? And I really liked his response to this one. He said, if you think about the country as a business, the country has a lot of intrinsic value, a lot of asset value. But this was the most interesting point. One of the most valuable assets of the country is that it owns 35% of your income, of my income, of everybody's income through federal taxation. The country retains the right to change that percent ownership at will. The government can change the taxation rate whenever it wants to. That's an incredible asset on the balance sheet to be able to do that. He says we also have immense real estate assets, infrastructure assets, and all other kinds of assets in this country. The asset side of the U.S. balance sheet is incredibly large. Obviously, we don't want the liability side of the balance sheet to grow too much. Debt, Social Security, health care costs. We have rising liabilities for sure at this time. But in order to put those liabilities into context, like any business, we must consider the asset side as well. So I thought that was an awesome answer to that question. And finally, the sixth question, when do you think we'll come out of this recession? He says he thinks we'll begin recovery by the end of 2020, and we'll start to approach a normal economy by the second half of 2021, when people start to feel safe again. Okay, that's the big thing here. When can people be in contact with other people without fear of contracting this potentially deadly virus? If we have an early vaccine, that's a huge kind of unknown factor here. And having an early vaccine to give people that confidence to be able to have more of a normal life as usual kind of behaviors would make an enormous difference in terms of how quickly the economy can rebound. So yeah, those are the highlights that I took away from Bill Ackman's interview with David Rubenstein. I will post to that interview in the description. But again, when investors that are at the top of their game, these super investors that you find in Dataroma, and for me, particularly the investors that Mohnish Pabrai looks to for new investment ideas, the investors that he combs through their 13 Fs every quarter. Those in particular are the investors that, whenever they do interviews or talks or whatever, I love devouring that information because, these guys are at the top of their game. And there's just so many wonderful things to learn through YouTube watching these interviews. So that's all I got, guys. Smash the thumbs up button if you like videos like this where I kind of give highlights from investor interviews. And I'm inching up on these subscriber numbers. I'm still about 900 watch hours away from my 4,000 watch hour metric that I need in order to flip on monetization for the channel. But I'm happy to have surpassed the 1,000 subscriber mark. And one thing that I thought was interesting, having passed the 1,000 subscriber mark, is that now I can do community posts. And I think I can post like images and polls in addition to videos like this one. So I'm able to have a little bit more versatility in terms of the content that I produce on the channel, which is fun. And the other thing, I can tag other YouTubers in my description and in my title to maybe work towards doing collaborations with other YouTubers. So if there's any other investing YouTubers that you follow, let me know in the comments below, and maybe I can slowly work at building a relationship with them and doing some collaborative videos with them in the future. Anyway, guys, that's all I got. I will see you in the next video. Take care.